what 2025 has in store for Nvidia. For that, I want to bring in our panel. We've got David Nicholson, Chief Research Officer of the Futurum Group, and Will Ryan, founder and CEO, Granite Shares. Thank you so much for joining us, guys. David, let's start out with you. We've seen shares of Nvidia surge more than 170% year to date. What do you think 2025 has in store for Nvidia when it comes to shares?
I think there may be a little bit more volatility ahead with pending rules that will limit their ability to sell into markets that apparently are passing those chips on to China. So that's the big unknown at this point. How much of their sales are actually going through this sort of backdoor channel to China. But I'm not expecting major dips, just it's always hard to maintain the kind of trajectory they've maintained for the last couple of years.
And then, Will, what's your view? Do you think Nvidia will still be the leader, the dominant player? I mean, there was talk this year that AMD might catch up. It has not been the case. But what's your view on Nvidia and the path forward from here?
Yeah, my view would be very much that Nvidia continues to be the market leader in AI, that its position really is so far out in front that it's difficult to foresee any credible competitor in the short to medium term. And that is why that David made reference to it just then. There has been some interference from the US government, the French government, and now the Chinese government inquiring about sort of monopolistic type practices because their position is so advanced. I think that the future for Nvidia next year is actually very bright. I think that we'll find a way past these sort of investigations, especially with, Musk's involvement with the Trump administration. And I think we see a $4 trillion plus market cap for Nvidia next year.
Although Nvidia's stock entered correction territory on Monday, experts remain optimistic about the massive chipmaker. Since their record closing high of $148.88 on November 7, Nvidia's shares have dropped almost 12%, falling 2% on Monday to $131.48. When shares fell 10% from their peak, a technical correction is said to have taken place. Long-term investors appear unconcerned despite the recent downturn. Nvidia was referred to as a top pick by analysts at Bank of America and Bernstein on Monday, with respective price targets of $190 and $175. About $176 is the consensus price target among the 20 brokers that Visible Alpha tracks for Nvidia. Artificial intelligence, AI, has become more and more ingrained in many facets of society since ChatGPT became a global sensation in the fall of 2022. In 2023, for example, U.S. regulations pertaining to AI increased by 56%. Companies are now developing computer science to help AI develop. The semiconductor behemoth Nvidia and the quantum computing startup IonQ are two well-known businesses in this field. Each business has created innovative technologies that have the potential to completely transform the computing sector, which has caused their stocks to soar. Nvidia's share price had increased by over 180% in 2024, while IonQ's had increased by nearly 140% as of December 11. However, which business offers a stronger long-term investment to profit from AI's secular trend? To answer that, I'll examine both companies. Because quantum computing can advance AI beyond what is achievable with the world's most potent supercomputers, IonQ is a compelling investment. Complex calculations that can take years for a standard computer to finish can be completed in seconds by quantum computers using subatomic particles. Although there are other companies working on quantum computers, IonQ's technology solves problems the industry faces. For instance, IonQ's platform can function at room temperature, whereas many quantum systems need temperatures lower than space to maintain the stability of the subatomic particles. Its technology enabled it to attract clients like Oak Ridge National Laboratory, which is modernizing the U.S. power system with IonQ's quantum computers. The company's revenue has increased rapidly as a result of its expanding customer base. IonQ's third quarter sales reached $12.4 million, a 102% year-over-year increase. During the quarter, the business also booked $63.5 million in new customers. Ionq isn't profitable, though. After spending $33.2 million on research and development, it ended the third quarter with a net loss of $52.5 million, up from $44.8 million the year before. Building cutting-edge technology is not inexpensive. Ionq's technological advantages keep getting stronger. It declared in November that it was purchasing Cubitek, a quantum networking business. The power of numerous computers connected to one another is what modern AI depends on. Ionq plans to simulate the network effect for its quantum machines with the Cubitek acquisition. So, what implications does this have for Nvidia's stock? Let's explore that. But first, a big thank you to those of you who've stuck with us this far. Creating these videos takes significant effort and dedication. So if you're enjoying the content, please hit the like button, subscribe to our channel, and share your thoughts on Nvidia stock in the comments. Your support truly helps us grow. Now, let's get back to the video.
Well, I want to ask you one really quick follow-up there, especially when it comes to Nvidia. It's been kind of this choppy trade recently, especially if you go back to October. It's just been kind of stuck in this range. It's still there today. It's a little above 130 bucks a share, but it's under pressure today. Does it seem like the valuation is stretched? There's been some argument about that. Meanwhile, there are obviously the bulls, which there are a lot of bulls around it, who say there's still more growth to come.
I think it's really depends on how you view valuations, because even when Nvidia was trading towards or indeed around its all-time highs, when you look at the valuation, some people could say that it was high, but when you think about a company that's priced for 100% growth, you could also look at the valuation and say that it was really cheap. So it's going to be really down to how you view valuations of these kind of hyper growth stocks. One thing obviously we do know is that the growth is expected to be very strong, continue to be very strong for next year. Margins as well, very strong. So I think that bodes really well for the stock.
And then, David, I want to ask you, when you think about, so AI has been a big theme. We expect that obviously to continue into 2025 with NVIDIA maintaining some leadership. Where else do you see growth coming from?
And I think this sort of dovetails with Will's point. It is a rising tide that is going to lift a lot of boats. So look at anyone who might be able to produce an alternative in any segment of the AI market to NVIDIA. So I still see AMD being bolstered by this, a whole range of kind of bespoke AI accelerator companies will be buoyed, all of the software around that. I think the OEM server companies like Dell, Lenovo, and HPE will also do well. But long term, I think that the NVIDIA margin black hole is going to attract a lot of people going after them, trying to cut away at their margins. There's obviously eventually an end to the stratospheric rise. I don't think that's in 2025, though, to Will's point. I think they're going to be just fine.
Yeah,
As AI grew, NVIDIA's business took off as governments and corporations exhibited an unquenchable demand for its semiconductor processors. For instance, according to some estimates, 10,000 NVIDIA chips were used to create ChatGPT. Due to NVIDIA's development of specialized chips, known as graphics processing units, GPUs, the company's products are well liked for AI. These give artificial intelligence, AI, systems the computational capacity to swiftly and effectively sort through massive amounts of data in order to complete tasks. The demand for NVIDIA's goods is still very high. In its fiscal quarter 3, which concluded on October 27, the corporation generated a record $35.1 billion in revenue. This is a 94% increase from the year before. Additionally, Q3 net income increased by 109% year over year to $19.3 billion. However, its most recent technology has the potential to take the business to new heights. Its Blackwell platform was created especially for the sophisticated computation needed by artificial intelligence systems. With more over 200 billion transistors in each Blackwell GPU, Nvidia says it challenges the limits of scientific computation. For Blackwell, customers are so ravenous that Nvidia management said demand greatly exceeds supply. Using Blackwell, the governments of Taiwan and Japan are among the institutions constructing AI supercomputers. Due to the high demand for its products, Nvidia anticipates $37.5 billion in Q4 sales, compared to $22.1 billion the year before. That represents a double-digit gain. Because of their innovative technologies, both businesses present strong arguments for investment. These are some more crucial considerations to make while choosing between the two. The Blackwell platform from Nvidia is so strong that it can mimic the capabilities of quantum computers. Blackwell is able to achieve this because modern quantum computers have a certain amount of time to complete calculations before the subatomic particles degrade. Therefore, quantum computers will not be able to take the position of Blackwell or other classical computers anytime soon. However, it is anticipated that quantum computers will eventually reach quantum advantage, which is the point at which a classical computer is unable to compete with a quantum machine. According to certain projections, quantum advantage won't be available until after 2030. As a result, IonQ is a more speculative investment because it might take years before their technology surpasses Nvidia's. Additionally, as each company's shares have increased this year, valuation is another factor to take into account. Their price-to-sales ratios, P/S, are shown here. For every dollar of sales, the indicator shows the price that investors are willing to pay. In comparison to Nvidia, IonQ's P/S multiple has increased dramatically in recent weeks and is currently very high, as the graphic illustrates. This implies that Nvidia stock is more affordable. When you take into account three factors, the superior investment option becomes evident. 1. The stock of IonQ seems to be overpriced. No. 2. The demand for Nvidia's Blackwell platform is rising along with its profitability. No. 3. It will take years before IonQ's technology is widely used. Nvidia is the most successful investment in the fascinating subject of artificial intelligence when compared to these two innovative firms. To stay informed about the latest developments from Nvidia and the ever-changing stock market, consider subscribing to our investing tutorial channel. We provide daily updates on significant market shifts and key catalysts, so hit that subscribe button to ensure you never miss crucial information. We'd love to hear your thoughts on Nvidia stock, so please share your opinions in the comments below. Now let's dive into today's video.
And then, David, I got to ask, when you think about the AI story, and NVIDIA has really been the king here, and the past 2 years, that's been a theme. What's next for AI in 2025, and where are we in the AI story?
Well, from my perspective, I think there will be an increasing pressure put on this idea that positive ROI for end user consumers, specifically enterprise consumers of AI, the pressure is going to be, prove it to me, prove that all of this massive investment that we've made is actually driving efficiencies that are measurable within my business that warrant continued investment. I agree with Will. Through 2025, I think NVIDIA is fine, and they are being rewarded for how great a job they're doing with global scrutiny, which is always frustrating. But yeah, that's really the next big question. It's going to be, show me the ROI.
Mm-hmm. And then, Will, what's your view, especially when you think about the AI arms race?
Yeah, I mean, what we're seeing is that huge multiplier effect. So for every dollar of CapEx that's been spent in AI, you have the multiplier effect throughout the industry. So NVIDIA has captured a huge amount of attention. But we saw recently that the benefits or the gains that companies are seeing from AI extending into the software sector, now with companies like Salesforce reporting a great quarter last. So we're really starting to see that cascade, that trickle down of AI and the benefits to other sectors. Look at the performance of companies like Tesla, since obviously the election result was announced, and part of that is driven by autonomous and the future for AI, again, within the transportation sector, which incidentally, NVIDIA is also increasing its investment in that, particularly in China, contrary to some of the narratives that you see. So again, this is about probably still, in my mind, 100% the most important investment theme that we have right now, which is AI, and that will continue and accelerate into next year.
According to a recent analysis by Bank of America, Nvidia and Broadcom are two of the best semiconductor companies for 2025. According to analyst Vivek Arya, artificial intelligence has significantly increased, particularly in the first half of the year, and this has been a major driver for both companies. Nvidia's next Blackwell chips, which are backed by significant investment by U.S. cloud providers, should continue to drive the AI semiconductor market. Broadcom is well positioned to benefit from its diverse exposure to AI infrastructure. By 2025, Arya predicted that global semiconductor sales would have increased by 15%, totaling $725 billion. This indicates a significant expansion, even though it slows down from the 20% increase seen in 2024. Demand from artificial intelligence is anticipated to dominate the first half of the year. When inventory levels stabilize and global auto production improves in the second half, demand from automotive and industrial applications should take center stage. NVIDIA's leadership in AI-related technologies sets it apart, as its products are essential to the expanding use of AI in data centers. With its extensive portfolio of artificial intelligence infrastructure, Broadcom is likewise well-positioned to benefit from this expansion trend. According to Arya, the current semiconductor industry is experiencing an upcycle that began in late 2023 and could continue for a further 18 months. However, there are also challenges, such as China's geopolitics, concerns about the global economic recovery, and potential shifts in attitudes toward artificial intelligence. Despite these challenges, Bank of America anticipates that demand for artificial intelligence will continue to be a significant factor, particularly for companies like Nvidia and Broadcom, whose technologies are essential to the industry's continuous evolution. Arya also alluded to the possibility of increased merger and acquisition activity in the industry under the incoming U.S. government, which would change the competitive landscape. Advanced graphics processing units, GPUs, system on a chip, SoC units, and artificial intelligence, AI, hardware are the areas of expertise for NVIDIA. The business is renowned for its creative contributions to the AI revolution and computers, especially the creation of generative AI and huge language models. NVIDIA is always fostering innovation and growing its ecosystem in order to keep its market-leading position in AI and accelerated computing. To keep its goods and solutions at the forefront of technology, the company is making significant investments in research and development, R&D. This involves the creation of new HGX GPUs, such as the B100 and B200, as well as the impending Blackwell Ultra, which will improve the business's AI and inferencing capabilities even further. NVIDIA is also concentrating on hardware and software integration, offering end-to-end solutions that maximize its clients' total cost of ownership, TCO. Businesses need the company's software platform, which includes QDA libraries and a variety of apps, to launch and grow their AI projects. To further solidify its position in the AI field, NVIDIA is also looking into possible acquisitions and new business strategies. NVIDIA Corporation is experiencing supply issues despite the high demand for its products, especially with the new Blackwell architecture. In order to scale production and satisfy the rising demand, the company is collaborating closely with its partners and suppliers. The company has high hopes for future growth prospects, such as the development of edge AI solutions, the growth of its networking business, and the rising demand for AI projects. Don't forget to share your thoughts and experiences in the comments below. Your input helps create a more knowledgeable community where we can all learn and grow together in the world of investing. Stay up to date with the latest market trends, insights, and key updates by subscribing to Investing Tutorial. We're here to help you make smarter investment decisions and stay ahead of the curve.